Hi, everyone. Welcome to ESOP Radio. Thank you for joining episode 5 of our ESOP Boot Camp, How to Finance Your ESOP. Our goal is to give you, the owner, CEO, or CFO of a successful business, the lowdown on ESOPs in a quick, straightforward manner to save you time. Guess what? Your time is valuable. We are not providing investment advice today. I'm Trevor Gilmore, CEO of Menke. Since 1974, we have done thousands of ESOPs. We've seen it all. As an ESOP ourselves, we are also ESOP native. Today, we'll cover the 2 ways ESOPs are financed. Number 1, outside financing by a lender, and number 2, seller financing. Let's go ahead and kick it off now. So in our first example, we raised $20 million of outside bank financing for a client. Overall ESOP value, and this is a negotiation value, was $50 million. So to do the bank process, we start off with what we call our ESOP fit analysis, taking a look at your cash flows, historical and projections, and going through and seeing what are the coverage ratios and what the balance sheet and cash flows can truly support. From there, we talk to your incumbent bank and also do a bank shop to find the right lender who's going to be the right long-term partner for a business like yours now and into the future. With this client, we assessed that $20 million was the appropriate amount and the company could cash flow it nicely. Family Trust owned all the shares. Through the entire process, and there's some negotiation here back and forth, we're able to successfully negotiate an interest rate below prime and also favorable interest rates on the excess cash held on the balance sheet and favorable covenants as well. This client had very clean financials, think audits going back several years, unqualified as well. So we're talking about clean financials and a top-notch management team ready to take the company into the future. So in other words, it's very much a bankable company. So this $20 million bank financing package was possible. Fast forward to the transaction, transaction closes, and the family trust gets the $20 million at close. Now you might ask here, what about the other $30 million there? He talked about a $50 million price. Well, the family trust carried what is called a seller note over several years. Seller notes in conjunction with bank financing often are subordinated to the bank. The beauty, though, is that the family trust and many of our clients view the seller notes as a long-term annuity. So in essence, you get a down payment from the bank and you have this annuity kicking out market rate interest, maybe IRR that is a bit higher as well to compensate you for the risk. Second example, $15 million company, we did no bank financing for because the seller was comfortable with carrying a $15 million seller note. Going full seller notes, definitely an easier process versus raising bank financing. We raise bank financing for clients all the time. Last year, we raised amounts between $2 and $50 million for our clients with banks. However, when you go all seller notes, the transaction can be a bit smoother and quicker because you don't have the bank doing their due diligence, plus the bank's legal team and so on. Part of our role in assessing what makes the most sense for you and your company is assessing the overall bankability of your business and determining if it makes sense to conduct a bank shop, but it's not necessary. Things come into play such as your reinvestment horizon, your liquidity needs, and what makes sense with your long-term trust and estate planning. In summary, all ESOP transactions are financed by one of 2 ways, either with the outside lender, meaning a bank, or with seller financing. Let's talk a bit about banks who lend to ESOPs. So that universe is pretty wide, but there's some niche players as well. So think large national and international banks, the quote unquote too big to fails. They often have ESOP finance teams. However, they have usually strict criteria and it changes all the time in terms of what industry, et cetera, they want to lend to. Also, there are very sophisticated regional lenders who love ESOPs. Our job is to play matchmaker and find the right lender with the right package with our clients. Some of our clients have gone through this process in the past, and that makes it much easier, of course, going through this a second time. Many of them have not gone through this process, and that's where our expertise kicks in here. There are also mezzanine lenders and private credit funds out there that like to lend to ESOP companies. You see some of that. Some of them will also often go higher than a senior bank. So in this example, maybe we could have got, 40 million instead of 20. However, the interest rate's much higher and it's also more risky for the business. So you have to weigh the pros and cons and figure out what makes the most sense. There is also some SBA financing out there as well. Again, interest rates going down the SBA path, typically a bit higher. and origination fees are a bit higher as well. So in summary, you have a few key financing options out there. Main thing is, what is the quality of your financials? Do you have reviewed or audited statements? Banks are going to want to see that. How stable is the earnings? And what's the plan for the future? And again, these are all components that we take a look at and analyze and drive that decision in our ESOP fit analysis. Thanks for joining today. Hope you learned something new. Check us out on LinkedIn, ESOP Radio, Menke, myself, Trevor Gilmore, and join us for episode 6. Take care, everyone. Have an awesome day.